Financial technology, or fintech, is transforming the financial services sector across the globe. The spread of the COVID-19 pandemic has already seen a surge in digital payments as businesses and consumers seek contactless ways to send and receive money. Alternative lenders using fintech have become an important source of funding for small and medium-sized businesses. Different from traditional lenders, these firms rely on technology to assess the creditworthiness of their borrowers by using alternative data. One such company that does that is Funder, and they're going to help me find out about the world of alternative lending. By using alternative data, fintechs like Funder are able to help small businesses get through the impact of COVID-19 and thrive. By gathering transactional data from multiple data sources and using algorithms to gauge people's creditworthiness and risk more accurately, millions of micro businesses and consumers can get the chance to get the finance they need to overcome the devastation of COVID-19 or enter the economic mainstream for the first time.
We have a variety of different data points that we look at, and we try and automate this as much as possible. One cool feature which we have implemented recently is guys, when they go through the application process, they put in their banking credentials. We then scrape all the information from their bank account, and this gets plugged into our credit models automatically. We have for different industries, we have different credit models, and we're able to give a quicker turnaround time for the clients.
The startup and micro business sectors have traditionally struggled to get funding from the formal sector because in the past, formal banks and lenders based their lending decisions on readily available financial information and credit scores. This left millions of South African businesses and consumers unable to access formal financial services or pay exceptionally high interest rates to micro lenders.
I think that just the word alternative means that, what is originally or traditional, people need to be looking at things differently. And I think the reality is that traditional funding, especially for working capital and your sort of asset finance through banks and traditional lenders, is just not working for the average SME.
According to the report by the South African Reserve Bank's Fintech Group, more than 200 fintechs operate in South Africa. The largest and most mature of these segments is the payment segment, with 68 entities actively operating in South Africa. The lending segment is made up of 28 fintechs, with 18 providing online lending. That segment is dominated by domestic fintechs.
I think I'm pretty excited about the South African fintech scene. Fintech has been growing in South Africa for a long time, and you've actually started seeing innovation in a plethora of sectors within fintech. So you're seeing new innovation in digital banks, in new ways of doing payments, in new ways of lending, like bridgements, cryptocurrencies, investment, financial education. There's so much going on in South Africa that I think in terms of, comparatively to the rest of the world, South Africa is pretty up there in terms of fintech. I think there are certain aspects where maybe we're playing a bit of catch up.
Fintechs aren't the only lenders using alternative data in their scoring. However, they are proving far more agile in being able to tap into payment histories that have largely been ignored by lenders until now.
I think the pandemic's brought, all it's really done is heighten and highlight some of those problems that were always there. So, for instance, it's, the only reason a lender's going to give you money is if they can see that you've got the possibility of good trading forecasts that you're going to be able to pay them back. Now, of course, with the uncertainties of the pandemic, it's difficult for anybody to say what's going to be happening in the months ahead.
Traditional risk criteria such as evidence of tax status and financial statements are typically required, yet during the coronavirus crisis, delinquent debt may have increased, thus limiting the SME's ability to access credit from the banks.
We're constantly investing in making our application process seamless and frictionless as possible. We're doing exciting things such as integrations with the various accounting software packages out there. This will allow us to gain insight into their accounting ledgers and have a real-time view of what's going on. Over and above that, we have insight into their bank statements, whether they upload it manually or they make use of our True ID, which is a system which scrapes all the information from the bank statements and allows us to make quick decisions and get our turnaround time less than 24 hours.
This segment of the lending market is unregulated, prompting the establishment of the South African SME Finance Association, also known as SASFA, in 2017 to regulate the industry standards and ethics.
SASFA was fundamentally built and started to encourage transparent and responsible lending to SMEs and to ensure fair treatment to SMEs. And so SASFA defined a code of conduct which all members have to abide by. And that covers important topics and defines important aspects of being a responsible credit provider to SMEs. And so that deals with things like how risk assessment should be performed and collection practices, disclosures and transparency that's required when providing funding to SMEs.
While alternative lending has not been immune to the COVID-19 global pandemic, it continues to offer potential benefits to both borrowers and investors. While mainstream lenders are beginning to use alternative data sources, there's no doubt that fintechs represent a new era of financial services.
I still think there's a massive gap in the market when it comes to small business finance. Banks typically are asset-based lenders. They want to lend against an asset and take that as security. A typical business owner, for example, if you take a pet shop who sells food online, he's invested his money into the website and into stock. That's not an asset that a bank would lend against. Hence, there's a massive opportunity for small business funding in the way in which we go about it.
The industry is set for exponential growth in South Africa in the coming years, and that's great news for consumers who've been excluded or are battling to survive the COVID-19 pandemic. Nastasia Arendse, SABC News, Johannesburg.